So certainly you have heard about cybersecurity, ransomware, hacking. Unless you've been living under a rock for the last 3 years, cybersecurity has been a subject you've seen at least on the news. If you're a business owner, you may have heard it from your IT department, maybe from colleagues or your insurance company. How big a deal is it? How much should you be worried? And is this a fad, just a hot button subject, or is it something that is an important factor to consider in the future? Well, let's take a look at some clues, at some third-party outside data that might give you an idea of how important this is. First, the State Department considers it important enough to have launched a new cybersecurity bureau. The bureau will protect against cybersecurity threats. Now, initially, they're talking about threats from government actors, Russia, China, Ukraine, that kind of thing. However, many cybersecurity threats come from private parties, maybe supported or protected by state actors, but it's not the Russian government actually doing the hacking. It's some other party. What about the insurance industry? Well, in the insurance industry, they're bracing for a catastrophic cyber risk. What does that mean? Well, 80% of insurers have reported a rise in claims, and the rest of the industry is preparing for cyber claims in the same way that you'd prepare for a hurricane hitting the state of Florida or an earthquake hitting California. They're bracing, not preparing, they're bracing for a catastrophe. That's the insurance industry. They have the most to lose from this. The insurance industry as a whole is the one place that has the most financial exposure to cyber. Who else is considering it to be important? Well, what about the private equity industry? Well, this one example, a private equity firm has invested $215 million into a cybersecurity firm. So there are 3 data points for cybersecurity. Let's take a look and see what that might mean for a business. If you are a small to medium-sized business, you may not have considered that cybersecurity or cyber risk or cyber losses are a probable, significant potential cost to your company. You may not consider it to be very likely that it's going to damage your enterprise. So you may not have taken precautions, purchased insurance, or done anything to adjust your business for the new environment of risk. That's normal. However, if all of the big players that have risk potential or upside potential are taking major actions, government, insurance, private equity, it might be an indication that at least some basic adjustments to your business could be of value. Now, what kind of adjustments are we talking about? No, you don't have to redo your entire business model to be afraid of cyber risk. You don't want to do that. However, most of the best practices that would be put in place for a business would not only protect you from loss and risk, but also have your business operate more profitably. It's not like you have to lock down and shut down all your computers where it's harder for employees to do work. It's not like you have to make your purchasing process and procurement supply chain more difficult to where it's going to add cost to your business model. Most of the things you would do would actually make your business run better. Where are you going to get these ideas from? Well, first, you can look at internal sources, IT people, management, that kind of thing. Second, and maybe a little bit more valuable, would be outside, external, third-party suggestions. And that could come from colleagues, people in the same industry as you, industry trade organizations, consulting options or resources. However, the most valuable source of cybersecurity improvements to your company would come from insurance. And it's almost like a free benefit of having a policy. You could hire a private cybersecurity firm, like the one we saw on the screen, and pay them directly a fee to do consultation for your company on cybersecurity. If that company that we saw received an investment of $215 million, how much do you think they're charging for cybersecurity? Look, if a private equity company is putting in $215 million for an investment, they're expecting to make a return on that investment, a good return. Private equity firms look at a 4 or 5x return on investment, which means if they put in $215 million, they're looking at getting $1 billion of return back. How much does that cyber firm need to charge you to make $1 billion in profit to pay back their PE investment? So that option maybe is going to be expensive. However, if you purchase a cyber liability insurance policy from an insurance company or an insurer that has experience in that field, you're probably going to get the same or close to it consultation suggestions from that company as you get by paying a private company to give you cybersecurity consultation. Not only will the cost out of pocket be less, your premium is going to be less than a consulting fee, but you'll get the consulting thrown in for free. Or you can look at it the other way around. Your premium payment is less than the consulting and you get a policy for free. What is going to be the value in getting third-party suggestions on cyber protection? Well, it's real simple. An insurance company has thousands, tens of thousands, or even millions of policyholders. Companies that have insurance policies exactly like yours, cyber liability insurance policies exactly like yours. Those companies have some level of claims, meaning that some of them would have a loss, a damage, cyber event that created a damage to their firm, and they filed a claim for insurance and they got their claim paid. That insurance company takes that claims experience, that claims knowledge, and they pass it along to the other insureds because they don't want to pay claims. If they have a policy, they're going to pay the claim. It's not like they're going to deny it or try to defend it. They're going to pay the claim, but they don't want to pay any more claims than they have to. So they're going to help you as a company prevent claims. Just like in the old days, fire insurance companies would help you avoid fire by putting policies in place of having sprinkler systems. Don't store gasoline next to the heater. Make sure your exits are open, that kind of thing. The cyber liability companies are doing the same exact loss prevention, risk prevention in the cyber industry. Part of the reason that it's important to get that knowledge from the insurance industry is right now they are the only ones, the only industry that's seeing these losses, claims, risks on a large scale basis that is sharing it outside of their industry. Look, if one particular hospital gets ransomware attached to their system and a cost of money, they may not be out there sharing that with hundreds or thousands of other companies to try to help them avoid that problem in the future because they don't have the time to do it, and it's not their job to do it, and in reality, publicizing it might hurt them more. Where an insurance company that gets claims from 100 different insureds or 1,000 different insureds, they want to pass that information along to third parties, especially their clients, to help them avoid the process. What's in it for you? How can you gain from it? Well, let's look at it this way. If you are a small to mid-sized company, let's say you have a $3 to $4 or $5 million revenue company, and you have a cyber event that has a direct financial cost of, let's call it $25,000. Let's say some hacker locks up your accounts payable and you can't pay your bills, or they lock up your accounts receivable and you can't bill your clients. What is your cash flow going to be like for a week or 2 or 3 by not having the ability to bill and invoice your clients? What if you have to pay a ransom of $25,000 to get that unlocked? What about your vendor database? What if you can't order from your supply chain because you don't have the ordering in place? What if the hacker or ransomware actor decides to download all of your customer files and threatens to put it on the dark web and sell private information on the dark web? You might pay. Or you might have damages. In addition to the dollar damages, you also have more reputational risk with other stakeholders. Your employees might be scared that the company's going to be destroyed and go out of business and they don't have a job. You may lose good employees. You may have a lack of confidence in them by being gun shy about being fully committed to the firm. What about employees? What about customers? If your clients see that there's some turmoil going on where you don't send invoices, their emails are bouncing, their customer service requests are not being answered, they might have some caution. They may not know why this is happening, but there might be some caution in them doing business with you. That could cost you sales. What if you have vendors that you buy from every month and they count on you for orders and you can't order for a week or 2? They might be concerned about your viability as a business partner and act accordingly. So that might be an indirect cost. Those effects on your business might be more than $25,000 in losses or ransomware payments. Even if you get reimbursed for that $25,000 from your insurance company, those other payments might not be recoverable. What if you don't have insurance? Well, if you have a $25,000 loss, let's say, and you have a 20% profit margin in your company, what does it take for you in sales to get back that $25,000 from net profit? Well, it's a factor of 5, so you need about $125,000 in additional sales to get back that $25,000 loss. How long is that going to take you? That's a big additional sales jump just to get back to even, not even to go forward. What are the types of risks that a company might have that you might not be aware of? Well, think about it. All your routers and modems and switches and servers, they were designed using technology from the late 2000s, like 2008 or 9 or 10, maybe 2011 or 12. But the technology that's in all your devices is 10 years old. The hackers and the people that are out there trying to defeat these devices are spending huge amounts of time figuring out how to get through them. Now, you might look at it like, well, my company has never had this happen before. That might be your defense. Never had a problem before. That may be true. But the reason you may not have had a problem is because the number of hackers or threat vectors out there are relatively small, but it's growing. Over the last 2 years, cyber criminals have found that that business model is very lucrative. So they're expanding. The same way you would do business development and growing your business, The hackers are doing the same thing. The cyber criminals are doing the same thing. They're growing their business. They're adding staff. They're training. They're learning. They're doing more growth of their company, so to speak. Just because you haven't had it happen to you in the last 2 or 3 years or ever is not necessarily a proof that it's not a risk, because this is really a new business for these hackers. It only started 2 or 3 or 4 years ago. So they haven't made all the rounds yet of all the companies. Plus, the number of cyber criminals that is out there has tripled or quadrupled just in the last year. So 2 or 3 years ago, there was a few just hitting businesses here and there at random. Now it's more thorough. They're making the rounds of every business they can because they know it's a numbers game, just like you do with sales. You try to contact as many potential customers as you can, knowing that you'll have a certain closing ratio. The hackers are doing the same thing. They're now trying to blanket and thoroughly hit every single business looking for vulnerability. They're pinging your servers. They're pinging your routers and modems. Every access device for your company is a potential doorway, pathway to your data. As an example, you have dozens, maybe hundreds of employees that either work remote or sometimes work outside of the 4 walls of your company. And if they do, their laptop, mobile device, whatever connection they're using to your company is a potential risk factor. If somebody could hack or get into that device, no matter what your firewall is, you let that employee log in to get through your firewall. All they have to do is get access to that device. So they just have to defeat the login for that person's device. It might be a 4-digit PIN on their computer. It might be a password on their mobile device. Once they get through that, they are wide open to your company. And these hackers know how to do that. It might even be just social engineering, phishing to your employee to get into your network. Look, we're not trying to overly scare you as a business owner to do something rash. Most or all of the procedures you would put in place make your business run better anyways. Even something as simple as having access to that employee to only the data that they need is helpful because they're now not confused, or it's easier for them to get right to what they want and they don't get distracted by other data. That's one example of dozens of policies you can put in place, making the direct access specific to an employee, not just an employee logs in, they can get everything. You may already do that. A lot of companies do, but that makes the employee's job easier too. They don't have to find data. They can only access what they need. In fact, there are algorithms that can direct an employee to the data they need for the project they're working on. So even if they're allowed to get customer data, when they log in, it will go directly to the customer data for the project or file that they're actively using. And if they access data outside of that boundary, either there's an extra step, an extra login, or it notifies somebody. So you're aware of not only threat potential, you're also aware of productivity. You're aware of what the employee's working on, and it helps you and the employee. So those are just a couple examples. Get your advice, direction from those who have direct knowledge of the threat. Insurance companies, not your insurance agent, not an insurance broker, but the actual company that underwrites your policy, they know what the dangers are. They have to pay millions of dollars every single month to cover these losses. It's painful for them to write those checks. They want to prevent writing them again to you to cover your loss. And you might think, well, that's good if they write me a check. It's not good. Because if the insurance company is writing you a check, it's because something happened bad. Something went wrong in your company. Even though you're going to get a check at some point, it will never put you back to where you were before that. Even if it's just the time and attention to fix that problem for 2 or 3 weeks, that's 2 or 3 weeks of not moving your business forward. So, again, what proves this? Those three models: private equity putting billions of dollars into cybersecurity, the federal government putting a new division to protect this, and the insurance companies, in their words, bracing for catastrophe. The insurance industry can brace for the catastrophe, and they'll probably withstand the storm because they have vast amounts of capital and reinsurance to cover them. Can you withstand a catastrophe? Even with insurance, if a cyber event hit your company and you had a direct financial loss, where would you be a year later if you lost 2 good employees, 5 good clients, and a vendor that provides you with product? Or if you had to go a month without accounts receivable, could you make payroll after a month? Those are things to be concerned about. Again, you don't need to be overly scared or panicked, but put good practices in place and start the process now. Look, you might not really need the depth of this adjustment in your business for a year, year and a half. But if you gradually build it in, it's not going to be a rush job to try to cover potential losses inside your company.